coordinate month-end processing to ensure timely completion. The month-end close checklist.
The financial accounting role goes beyond just transactions, covering income, cash, bank loans, savings accounts, monthly expenses, and other essential parts that impact the entire organization. How do you make sure you haven't missed anything? A misplaced invoice or statement can result in curious losses that you won't be able to account for. The following is a month-end close checklist to go over if you find yourself in charge of the monthly closing process. Cash. Adjust for any outstanding checks or deposits until your ending cash balance matches what the bank statement says. Deposit any undeposited funds from the prior month. Inventory and fixed assets. Properly document depreciating value and outdated/expired inventory. Accounts payable and receivable. Look for unapplied credits or past due balances to write off. Notes payable with the bank. Consider amortization schedules and properly document the cost of monthly interest. Intercompany accounts, payables and receivables should match between both businesses. Check for prepaid expenses too. Accrued vacation and payroll, for employee reimbursement. Accrued taxes, including those that apply to property, sales, and payroll. Expenses, including supplies and maintenance costs. This checklist does not have to be completed in order. In fact, some tasks might be delegated to another department. Identifying task dependencies will inevitably be an additional step for larger organizations. On top of a laid-out plan and a checklist, let's go over some best practices to make this essential business process as smooth as it can be. Never sacrifice accuracy for speed. Closing the books can be time-consuming, but the data you're working with will reflect in your future business decisions. Manage your expectations accordingly by not rushing the work and accidentally leaving out important statements or entries. The good rule of thumb is to plan on finishing the process in 10 days after the month ends. But remember to manage your time well. Efficiency matters in the accounting department. If you have a closing date, dedicate yourself to meeting it to the best of your ability. Discuss with team members about realistic timelines and communicate properly to avoid the chance of delays. Slowly learn from mistakes. You close at the end of every month, so there's always another chance to improve upon setbacks seen in the previous month. New accountants will need some time to get acquainted with the related tools and software and should take advantage of any available training programs. Make relationships with other teams, even those not in finance. If more people are aware of what you are doing, other departments can help contribute needed financial data and understand where the effort is going. Senior management especially should have an idea of your objectives. Take advantage of automation. Technology has streamlined accounting tasks greatly. Software tools can be used to collect data and run calculations quickly without the risk of human error, among other optimizations. We will talk more about automation in the accounting space and the month-end closing process specifically later. But whether you're a seasoned professional or a new accountant taking on the task of closing the books, having these practices in mind will help you hit the ground running.
Pitfalls and challenges.
This accounting procedure is not without its challenges. One of the most glaring issues well known to business administrators is the inefficiency of gathering all the information needed. The problem here is that financial data comes from several disparate sources, and, once extracted, accountants must clean it up and turn it into a consistent format. Having to create multiple spreadsheets to cover labor-intensive data cleansing slows down the process and increases administrative expenses. Another bottleneck is coordinating the work amongst all the departments involved in financial data. Larger enterprises especially have to deal with complex interdependencies that are a mess to untangle in the last few days of a month. How do you ensure you aren't falling behind or losing track of where you are in the checklist? This time-consuming work takes away business time that could be put into more useful applications like risk management, administering internal controls, and performance analysis.
Finding the solution with automation tools.
Accounting software today is more than capable of accelerating many of the tedious tasks associated with the month-end close, including gathering the accounting data, preparing reports, and ensuring everything is filed and reported on by the closing date. The benefits of going after these solutions are numerous.
Less manual work.
The elimination of manual data entry is usually the first selling point accounting teams look forward to, but the advantage here extends beyond that. Some tasks need to be scheduled according to a date or time or need to be triggered by dependencies. Thanks to automation, there will be no need to constantly monitor each task and notify responsible individuals of the next steps. Technology can also be used to standardize account reconciliations and automate the creation and processing of the thousands of journal entries businesses inevitably work with.
Improved visibility.
Refer back to the month-end close checklist. Each item on the list is often done through a separate spreadsheet by isolated individuals specific to their departments. When done the traditional way, these tasks are invisible to the wider finance function, and it can be difficult to integrate the work with the monthly closing process as a whole. Even larger organizations struggle with fragmentation and coordinating company-wide financial work, as they are spread out across multiple geographic locations. The frustration is further exacerbated by the high number of interdependencies to take into account. The goal of accounting software is to build a unified, digital environment where every team can collaborate towards the completion of the checklist. Dashboards and notifications additionally monitor the progress in real time and give management an idea of what to do next. This level of visibility ensures that everyone is on the same page and that issues are spotted before they become significant problems.
Simplified auditing.
Software easily records closing activities, who performed them, and what time, resulting in a convenient audit trail. Accounting professionals are able to verify that best practices are being followed and can trace back responsibility whenever mistakes are made.
A more refined approach to accounting.
Large hassles during the month-end closing process might be an indication of underlying issues with your business's approach to accounting. For example, if an accounts payable team fails to become involved with the purchasing process on time, it will have to play catch-up at the end of the month to issue all those missed payments and double-check the backlog of documents and invoices. Automation software gives these teams awareness of financial activity throughout the firm, giving them a chance to provide input for purchasing decisions early on.